Hi guys, welcome to the sixth episode of my trading course. Today we're talking about fair value gaps, imbalances mainly. I think I'll make two parts on that because I want to show you fair value gaps more on practice. This will be more a bit theoretical. And guys, before we start, don't forget that first link in the description is my Telegram, so definitely check it out. Lots of useful stuff there, and without further ado, let's jump straight to the lesson. So guys, imbalance. And imbalance is a gap in a fair value that forms during moments of inefficient pricing. And before we even jump to example, I just want you to look at these three candles. And just while I'm saying, just focus on that's exactly imbalance. So imbalance is when you can say that trading volume tilts hard to one side, either demand or supply, but it does it too fast. So the market leaves untraded orders behind. And this is also the candle that forms after a big player dumps volume. So it's a three candle pattern. And price doesn't meet any resistance from orders, so you get a sharp move. And the result would be a price inefficiency. And the reason for that is lack of liquidity or the lack of orders. And this zone matters because later on, it becomes a magnet for a price, and a price imbalance will get filled. Most of the time, I trade 0.5 zone, so it's like I trade the 50% of fair value gap. And before I forget, guys, it's on a rectangle. You just have to go to settings, you go to style, and you have this middle line. I highly recommend you guys to enable it because most of the blocks or something, you would need this CE, the 50% line. Because typically when price reaches this level, it's an IF, first of all, to close price inefficiency, but also like 90% of my imbalance trades, I only take the 50%. That's it, just 50%. I don't take, actually recently I started to take also 25%, but that's something you'll get with experience. As of now, I would recommend to get 50%. Most of the entries are on the 50%. Because from my experience, it kind of gives the right reaction I want. And yeah, just waiting for a price to do this. For instance, if we trade here and we have a gap here, most of the time you will see something like that. Not you go here and then up. But also, if you go here, your stop loss would be somewhere here, so you wouldn't get stopped unless a price just breaks the zone and completely goes downward. Very recently you will see something like this. So guys, just let me show you, because I don't want to make this video too long. We'll make a big video once I'm showing everything in practice. But as I said, it's a three candle pattern, so 1, 2, 3. What we're looking on the chart is first candle, then a big move up, or doesn't actually matter, a move up, and the third candle. And you will see that fair value gap, we start with a wick of this candle to the wick of this. So that would have been our fair value gap. So what we're looking for is for three candles. And the middle one should be a bigger one. And they both, the side candles, so to say, 1 and 3, they should have wicks. So everything here, price just skyrocketed it. So that would have been a fair value gap. And the same, guys, you can as well see here, for instance. You can see that there is a wick here, there is a wick here. That would also be a fair value gap. And not going far along from it, you can see, okay, three candles, one is big, one nothing in between. We have a wick here and a wick at this candle, fair value gap. Let me just really quickly try to find an example where it's not a fair value gap. So for instance here, right? Let's pay attention to these three candles. It's not a fair value gap because price been throughout this candle. Because this wick is super high, this wick is super low. The only reason it would have been a fair value gap if a wick would have been something like this small red wick, and then I would do something like that. And as always, with any other confirmations, fair value gap on a higher time frame holds more power. What I also want you guys to remember is that it's not a reversal, it's a magnet. So for instance, if we go down, 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 down. No, that's not a fair value gap. Actually, guys, also a very nice one. Oh no, it's actually a wick here. Yeah, I didn't see. It should have a wick. At least I always trade only from wicks. If a candle doesn't have a wick, I don't trade it. Yeah, guys, so for instance, also fair value gap here. And with experience, you'll start to understand it in a second. Okay, guys, something I want to talk about else is CME gaps. For this, we'll need this chart. So let's talk about this because it's also pretty important. A gap on Bitcoin CME chart is a price gap that appears because the Bitcoin futures market, it's where big players trade, banks, funds, and etc. It's closed on weekends. So something you might know for Nasdaq, S&P 500, etc. You cannot trade those on Saturday, Sunday. Same with this chart, guys. And if you're not familiar with it, it's a price chart of Bitcoin futures traded on the Chicago Mercantile Exchange. I believe I pronounced it correctly. It's an institutional futures market where big players trade. So it's banks, funds, institutions, etc. And main features of the CME chart, it operates during regular trading days, but doesn't trade on the weekends. So Monday to Friday it works, Saturday, Sunday off. And that's exactly why the gaps often form in the chart. Gap between Friday's close and Monday open. So, yeah, like, if you want to pay attention, yeah, that's a gap. And you can see, actually, breaking my theory again, but I don't want you to stare on an empty chart. Look, guys, again, 50% entry. Oh, fuck, sorry, my bad. 50% entry. And for instance, you're hunting like this liquidity. And that's a nice trend. 50%. And you see, guys, that's why you should put your stop loss. Also a good example. A bit below the exact fair value gap. Because you might get hunted. Because that's a hunt for all the people who just did this. So just by putting it a bit lower, I always put it a bit lower, you're now stopped out and you're getting this crazy trade. But guys, back to CME. So it's a regulated exchange with high liquidity and reliability, and it often serves as a benchmark for professional institutional traders. And CME prices are often considered like more official or representative for global Bitcoin market due to participation of major players. And it helps to track major moves, contract quotes, and better understanding gaps and the overall institutional trend. And these gaps, they characterize incomplete market operations or liquidity that the market aims to close. It's like price leaving an empty spot in trading history. Basically the same imbalance we've talked before. And as I said, guys, it might take some time for it to close. It's not immediate, but it's a very high chance it will happen. Like, look, that's a gap. It's been closed. Let's look some more. A gap. It was closed. A gap. It was closed. Again. A gap. It was closed. So you see, guys. Oh, that's actually also a nice one. Look. Because I tell you guys, it's not happening immediately. Closed. So if over Saturday or Sunday the price on the regular crypto market changed significantly, then on Monday on the CME chart you'll see the difference and you will see the gap. So on Friday you can see that the price was 111,000, Monday 111,365. Yeah, guys, so simple theoretical lesson. And on Wednesday I hope I'll get with the real lesson where we just look at the charts and we trade from fair value gaps, just pure fair value gaps, and maybe also inverse fair value gaps, something I'm gonna talk about on Wednesday, right? Yeah, that's when a second video is published, I hope. Guys, not gonna take any longer here. Check out my Telegram. And yeah, also guys, Happy New Year. 3rd of January right now at my place, but Happy New Year. In 2026, I have lots of plans regarding YouTube and just my trading overall. I really want to learn how to trade Forex, guys, so I'm really gonna study hard on it and do lots of trades. I already have some experience, but it's way too little to actually talk about it. So first I wanna master my skills and then actually show it to you. Okay guys, thank you for watching and see you in the next one.